Hi guys, welcome to honeystocks.com market health update. This is going to be just a very quick 5-minute video just in addition to the market analysis that went out this weekend, just with obviously all the stocks. If this is your first time here, if you do like it, please do just subscribe to our channel, give the video a thumbs up, share it, whatever you want to do, it's all appreciated. So what I'm going to do with this video is really just talk to you a little bit about what is going on with the major indices, what we can maybe look to expect in the forthcoming week in the market. I'm a technical analyst and that is what I do. I don't care for fundamentals very much, but rather than ramble on it, I'll just get to the charts. So I think the first thing that we've got to be aware of here is the S&P 500 ETF SPY. We've had a bearish weekly candle, which isn't great. So we obviously have to be aware of support and resistance. That's what the technical game is all about. And I think when we zoom out on a chart, it can give us a better idea of what's actually going on. It's very, very clear here. There's nothing complicated about this chart. We have to remain bullish, I think, above this level. It's not great that we've had a bit of a rejection around the key significant round number level, but we've dropped nonetheless this week. It's not a great week for SPY, but you have to always put things into context. With the run that we've had, 1, 2, 3, 4, 5, 6. So it's the first red week in 8 weeks. Perfectly normal. I mean, I don't see anything massively concerning. I think the only concern with SPY is if we drop below this level. I think that would be the signal to me that we're dealing with a failed breakout, and we know with failed breakouts that we can get fast and aggressive moves in the opposite direction. So that's certainly something to be aware of. Now, next up, we've got to talk about tech. Obviously, tech is one of the leading components within the market, so we need to understand what is going on with tech. We can see what happened a few months ago where we had this failed breakout and then we had a bit of a decline. Again, we've had another bearish candle here, and again we just have to zoom out, plot in the support and resistance. Again, very similar to SPY. We've got to be bullish above this level. Below it, not so much. You'd probably see me looking to exit positions and so forth. Now, we obviously can have a look and narrow things down. This is tech on the daily chart. So again, we can see just how far it's got to go. We've had a bearish engulfing candle that I think we know. That's not a great sign, at least in the short term. So we can probably expect a bit of a decline, maybe Monday, maybe Tuesday. So there might be a case to be had here that we come down and we test this support level. But again, I will remain bullish on the overall market with tech, provided this level holds. The Dow, a bit more straightforward here. Very key support level here. Again, got to remain bullish above this level. There's nothing bearish about the Dow at the moment, and we know with the Dow that it's the number one area of the market. The rest of the market tends to follow the Dow. Bit of a grey area. Does the S&P 500 follow the Dow, or does the Dow follow the S&P 500? They probably lead each other a little bit, but for me, the Dow is the most important index on the planet, and I think provided this level holds, again, we've got to be bullish the overall market. But again, put it into context, guys. It's had a bit of a run up. A red week is perfectly normal. So again, not massively bearish by any means at the moment. The only one that is a bit of a problem is the Russell 2000. Now, if you're watching this and you have an understanding of Dow theory, as someone who is registered with the CMT Association and working towards my chartered status for technical analysis, which is obviously a huge deal, Dow theory is massive. Now, the one thing that you have to understand is that modern day Dow theory does take into account the S&P 500 and also the Russell 2000. When the Russell 2000 breaks out and the Russell doesn't follow with it, it's a problem. So the fact that the Russell 2000 is in a very clear downtrend at the moment, it's not great. So that's definitely something to be wary of. I think if the Russell 2000 can certainly move above these this level here. This is the weekly chart for the ticker IWM. I think if the small caps can get their arse in gear and start moving, then it's probably a good thing for the state of the overall market. I think the small caps really do need to start performing. But again, we have to put everything into context and we have to assess the overall market, the major components, how the stocks are performing. There's a lot more green candles out there than there are red candles, and that's enough for me at the moment. So if you've enjoyed this video, feel free to go and check out our weekend stock market analysis, where we have 20 charts that should be on your radar for the forthcoming couple of weeks. They may not be actionable on Monday or Tuesday, but absolutely they could well be in play in the next week or so. So if you enjoyed this, please just give us a thumbs up, and we'll hopefully speak to you soon.